SPDas, we're ready for you anytime. The trading floor is yours.
Yes, sir. Thank you very much. And once again, good morning and welcome back for those who are joining the New York session 2, 5th of Feb. We are just about 1 minute past 9:30 a.m. now. We'll be redoing the counts again let's get started with the euro. And then we've got to touch base with quite a few number of instruments. New York session is quite busy actually in terms of the number of instruments that we need to touch base because we don't want to miss something that might happen on the indices front anytime in any moment. So we'll add up Dow Jones and VIX, possibly SPX as well. All right, so that's the story. Five up. It's being followed by a three down, corrective wave. So we've got my new degree wave one and wave two in place, and the rally continues. I think it's not giving up on the corrective side, which we were expecting last session, right? We were expecting a decline. I think the fifth wave is still on. It looks like it's wanting to take that resistance out of its wave first, and and then probably pull back. And it makes a lot of sense actually. One of the most basic theory sessions that we take is the rules of support and resistance. And rule number three says when a high is taken, let's say for example this high is taken out, bulls score a point. Let's say this is taken out right here or there. So bulls have scored a point, and once they score a point, they take a break. So that is a pullback in our technical terms. So ideally, if it rallies through 460, which is a good meaningful resistance on the hourly chart. I mean, you have the first one almost taken out at 32. That's almost done, and if it takes out 65 today, it would be a good confirmation, and it would also set up the stage for a slight corrective decline. All right, so that's the wave story. We all know the potential target is 750, 1.0750. Stop loss is around 1.0175. And we have booked partial profits yesterday, not yesterday, but the last session. So when we get a pullback, we will add, or I will suggest to add. For those who are just joining, you'll have to bit of wait a bit. Actually, there's nothing wrong in it. Let the first meaningful resistance being taken out, and then on a pullback we can re-enter. But I think we are on track for the next leg. The bigger this wave is, um, the supreme is going to be wave three for us. Okay, quickly we'll move on to the dollar index now, and the dollar index has given up nicely on the south side after. See, that push was so surprising, you know. Monday morning, Tokyo, Sydney overlap, and we were like, okay, so we were expecting 109, and we are now at 109.40, 50. The good part was it didn't break above the previous high, just 110. So cut the story short, and here we are. We've got wave one, possibly wave two, and wave three now in place, and we are kind of looking for a, a pullback, wave four. Let's find out where it could go and pull back. I think it's, let me remove this retracement, and if what we have done is correct, let's also check if whether wave 3 is complete or not. So 107.31, it's hit the first one, 107.31. It can still go down to 106.86 to complete the third wave. But I think the recent drop is kind of taking its, I mean, it's almost complete in if you count the sub waves, it's almost complete. 107.26 it says. So it could be possible that we are very close to a pullback. And unlike euro, dollar index has already taken that support out. Makes a lot of sense for the dollar index bears. Now, this point is scored by the bears, right? That's basic of support resistance. So they scored a point. Ideally, they should go for a break, and this is where we're expecting the break to end somewhere around 108.20. So, trading point of view, those who have already traded, positional traders, partial profits booked, but we've got to re-enter at some point in time. And those who are joining fresh, they need to enter fresh, right? So that's the area 108.20, 108.50, 60, where you've got to re-enter or add positions on the short side. At this point in time, the stop loss, we are not moving below 110.30. We'll do that next week possibly, and the target is 105. All right. So that is the story for the dollar index trading point of view. Gold. Gold, it has paid something on the south side. I mean, 70, 75, we took some aggressive shots. It's gone down, but it's not giving it up. It's holding up. All right. That gives us an impression that whether that's a corrective decline again on the hourly chart. I'm not showing the larger degree count because this is where the action is always 1 hour and 15 minutes. So again, you can see that that's a corrective decline. So maybe you can, let's take the trades off the desk. Please book profits on the shorts taken in the last session, the aggressive shorts taken in the last session. Please remain flat for now. We'll remain flat for now. I think we sold around the same price, 60, 69.70. So it's at least a break even for us. And let's remain flat for now. The overall story in gold, let me brief those who are joining in recently and just now. The recent story in gold could be as follows, as far as the wave counts are concerned. The larger degree counts, yes, we've got wave 1, 2, 3. I'm going to put wave 4 somewhere here and wave 5 higher. Got that minor wave. Okay. So All right, that's the story which is complete. One, two, three. So we can zoom in towards, or maybe we can go to wave four. Oh, sorry, not wave four, but 4 hour chart. All right, now if this is an expanded flat, then the structure could be as follows. Correct, because expanded flats wave B would go above the previous high. The and up to what extent is, if I'm not wrong, it's a 38.2% of the distance of wave A. So if we go reverse, 38.2% of the distance of A wave A, then the 38.2% mark is coming around the 2890 level. So the 2890 could be could be an important level to watch. I think this we did last time, and we had taken some aggressive shots, but right now we are absolutely flat. Maybe by the next time when we meet around the Tokyo Sydney overlap, I think that could be the case where we can reach there around 2890. This is the zone where I'm going to mark it up and keep it as it is. When we come back, let's see what happens. So this is the zone 2890 is the resistance for us. We'll be looking to sell there. Uh, and before committing on the short side this time, all right, we will look for a potential top and reversal signal as well, or reversal pattern as well. Maybe we'll go down on a 15 minutes time frame, or even lower, maybe around 5 minutes. We'll catch the first impulse. The problem is, right now, if we go short, it's going to be a chance, like, all right, and we don't really need to do that. All right, that's the area where we would be looking to. And if it breaks the 38.2% ceiling, I need to go back to the and refer if that ratio is correctly defined by me here. As far as I remember, the theory is around maximum 38.2%. That is where wave B could actually go and terminate. So still we are in the vicinity of an expanded flat. We are doing this exercise to find out that our count, uh the count that we are proposing, which is of an expanded flat, are we on the right track or not? Wave B, again, it has taken shape of three waves. That is important. So it's either taking a WXY. If it's a WXY, then it's going to go like a major three wave down, like that. And if we take the extension of the first wave of wave B, that is also kind of matching around 28 bang. It's actually matching bang on target with the 38.2% of retracement. So you know what? When you get such a Fibonacci convergence where the extension of one wave is matching with an extension of another wave or retracement of another wave, some kind of an electric bounce can be expected if prices manage to reach there. So we are going to wait, or maybe we'll have a limit order just in case if prices jump there before we meet again. So here's a limit order. potential short around the 28, 90 mark. It's going to be 8. Let's put a range here, 85, 90. And that this is the tricky part now, stop loss. If we are expecting 90, we need to put a stop at least around 5 points above that. And we don't want to place more extended stop losses because we know that it's a calculated risk. I mean, we are selling at the termination of a or a potential termination of wave five. So let's remain at 29, 28, 95, so 95, just about. And we are not very sure if it's going to test exactly 28.90 or it's going to go a bit higher. But if it does, we will always re-enter. For the first time, I think we'll keep the target open at least for a few days. I think it should go up, go, it should remain open. All right, so I don't think this work is it's worth taking time actually. This work, and it looks like we are on the right track at least for now. Let's see how the price action behaves if it manages to reach 28.90 zone. All right, so we've taken a good amount of time in gold. Let's look at the points. Last session we were like a bit skeptic on most of the coins, and we continue to remain skeptic because if it is, I'm personally not going to recommend any long calls right now. It's going to be the same story that we discussed last session. In fact, it's going to be wave one. I'm going to keep that count as it is. Let's do that. It's a lower degree wave 1 and 2 and 3, 4 and 5. Maybe if we can go on an hourly chart, it would be more better. Let's change this to minute. Yeah, it's okay to change it to minute rather than minute. What we see now is wave 1 and 3. Now we're proposing a diagonal structure because wave 4 has entered the territory of wave 1. So, but it would still be a motive structure, even if it's a leading diagonal, it would be a motive structure, correct? Now, when does this count become invalid? As I keep saying, it's an objective way or objective study. So when it breaks above 106 from here, prices going above 106 from here will nullify this proposed wave count. All right. This is where we are expecting prices to go. I don't know if we did an extension last time. Let's do that. Is it going to take us? I mean, sometimes it's not going to match at all. 91 it's showing, but it's going to go 91 will not suffice. It needs to, it would ideally go and take that low. All right. So that's the proposed wave count for Bitcoin, and we'll have to wait a while. If but keep in mind, brothers, if it breaks above 106, this count is invalid for now. That's the bearish count. Let me write it down here so that it's very clear. Invalid above 106. Okay. All right. So that brings us the objectivity as well on the desk for the trade, so we can take ownership with more confidence and 89. Then we are ready with the first wave lower. And what it means is that there's going to be a pullback towards 103 again, and what's going to come next is going to be a big one. Okay, so now this is a leading diagonal example, correct? There is another count which is also possible, which I'm not discussing right now, but just keep in mind if this wave three is extending, this minutia wave three is extending, then we've got wave one and then wave two of three, and then the third wave is going to go much lower. If you look at these sub waves, I mean 5, 3, 5, and again 3, all three waves and overlapping each other. These are all corrective waves. All right, so that is the story for Bitcoin. We will refrain from other coins right now because we are already flat. Don't intend to go long there. Let's take up a couple of three more charts with the Dow Jones, SPX, and VIX. Did we discuss a potential consolidation happening, or maybe we were expecting a consolidation to happen at a larger degree, a larger wave? That's fine. This is a consolidation zone. Now there are two impacts for this. If it's a bullish triangle, then it would go and make a new high and then reverse. And if it's a bearish triangle already with wave 1 and wave 2 in place, or maybe a bit more sideways, then we are heading towards the south side, 43,000 in the next cycle. So the targets are kind of unchanged for now. It's 40, 43, and 41, I suppose. Let me take up the 4-hour chart. It will be more clear, or maybe daily charts. So believe it or not, we are looking or pointing towards the 41,000 mark, back to square one, where we started from around 13th of December. And the kind of tentativity that the markets are showing right now, we don't want to commit further. We've already traded with a stop around 45,500. But if you're an aggressive trader, you might want to sell here with a stop of 45,500, 600. But if you're a conservative trader, let these 5 waves complete first, and then on a pullback we need to sell. That's the story for Dow Jones. Let's look at SPX 500. This chart is telling us a serious story, and if it turns out to be exactly what we are going to discuss in the next couple of minutes, you need to pay attention. We all need to pay attention here. Okay, I'm going to remove the path. Those extensions are okay. We don't need to touch that right now, but this would be an interesting story which is unfolding, and it's right at the brink of a collapse. And that's a 4-hour chart, so it is okay. But I'll stick to my Newton degree right now. We'll change it later on. That's a minute 2, correct? And then we have 3, 4, and 5 going lower. So we'll keep it as the minute degree right now. Let's go back to the hourly chart quickly. And if we step down one more degree to a sub-minute level, this part is again a, if it's a triangle, a bullish triangle unfolding, then we might see a push up there. So I'm just taking my chance to print the sub-minute wave 2, and then 3, and then 4 and 5 lower. Before we do anything else, I need to change the degrees to a sub-minute. So we got wave 1, 2, and 3, 4, and 5. Let's take this retracement or extension out for a while. We can project the extension for the third wave first of the sub-minute degree. So here we are, sub-minute degree, wave 3, kind of take us through 57, 5700 level, 5700 levels, and then we need to push wave 5 lower, and wave 4 might take a while. Remember, this is an extended wave, so no matter how much we try to project with the help of Fibonacci, the final results are going to come only after, it's only in the hands of markets how long it wants to extend. Okay, and remember 2008 collapse. um, it was a different time frame daily chart, but the third wave, when it started to drop, it was like an absolute bloodbath in the markets. And tell you what, I have very less, forget about conviction, but very less confidence on the equity markets, global equity markets, on the long side. But if you ask me to do something, I would simply go and sell it right now. So a hypothetical wave 5 extension could be, oh, that's a wrong one. Need to start from here. A hypothetical wave 5 extension could be, uh, just hang in a while, brothers. We are going to project one more wave lower. In fact, two more waves lower. So that is the fifth wave projection, and we are going to give some space. And this fifth wave is actually wave 3. Where's the wave 3 orange? Okay, here it is. That is wave 3 orange. And then we've got to go somewhere wave 4 orange. I'm going to remove this, okay, because too many red lines will only create confusion. You just need to remember the counts that we are placing. Those are the price targets for us. And let's now count the orange wave 5. Here it is. So please come forward, sir. We need you. We take one more extension. Wave 5. Wave 4. Here we have the fifth wave in the orange. That's amazing. If this path is followed as we have done, it's going to be fun watching, believe it or not. So we can go on a 4-hour time frame. We can see that clearly over here. So we've got 3, 4, and 5, and Okay, this is going to distort view because we've done it on the hourly chart. But whatever the case, if we bring back the hourly targets here, it is pointing towards 5,300 something, which is we are trading at 6,000 right now. So what like 10% decline, more than 10% decline, correct? If it comes to 53 and on the daily chart, the support is I've just taken a bit more time actually. It is very close to the support here, wave 4, the August low, and it's very much in line with breaking below the August low. All right. So whether we understood the path or whatever, keep this price target in mind: 5,300, 5,100. All right. So I think we can bring this session to a pause now. And if SPX is going to drop like this, VIX is going to shoot out on the north side amazingly. All right. So I'm going to hand it over to Ego once again. Thank you everyone for tuning in, and I'll come back. We'll join you guys after a few hours in the London, Tokyo, Sydney overlap. Back to you, Ego. Thank you so much. Sorry for extending.
Thank you very much, SPDas. Always a pleasure.
Thank you.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. Forex Lens.